The European Central Bank has lowered the interest rate again, and we're now fully entering the low interest phase. We're now seeing a massive influx of money that's going to flood into the capital markets. The euro crash is in full swing. Some might be thinking, hey, the euro isn't crashing at all. But if we look at it compared to Bitcoin, then the euro is crashing massively. It's not Bitcoin appreciating, but the euro depreciating. This happens when interest rates are pushed lower, increasing cheap money. This should push Bitcoin forward due to the correlation between money supply and Bitcoin price. High money supply means high Bitcoin price, and low supply globally or in the Eurozone makes it harder for Bitcoin. Bitcoin can rise without global liquidity, but it's easier with more money flowing. That means high money supply, high Bitcoin price, little money supply, low money supply globally or even in the Eurozone, then it is more difficult for Bitcoin. It doesn't mean that Bitcoin can't rise without global liquidity, but Bitcoin definitely has a much easier time when there's more money flowing around. Let's take a look at what this interest rate cut means for Bitcoin, because there are some important things here that we really need to look at. Things have happened here that are, let me say, very, very questionable. You really have to stop and think, hey, is what the central banks are doing actually helpful for us? Is this really beneficial for the economy? Is this beneficial for you as an individual? Is this good for the Eurozone? And above all, it could be that Germany ends up being the big loser in this low-interest policy. Right now, we have rising inflation, and the ECB is coming to the conclusion that it's time to lower interest rates. I mean, do we really want to shoot the euro straight into the grave right now? Do we really want to send the euro straight to oblivion? I mean, if that is the goal of the European Central Bank, then they are really making good policy here. Or if the goal of the central bank is to pump Bitcoin up massively. But you can't just lower interest rates when inflation is rising. This is completely far removed from the job of the central bank. The central bank is supposed to ensure price stability in the Eurozone, but it's doing the exact opposite. The place is already on fire, and the central bank is just pouring gasoline all over it. Because we see other countries, like for example, France, which is having massive problems and has a much higher national debt than Germany, just faced a government default or, let's say, a political mess in France and so on. France is really on shaky ground, and if, of course, France is facing a state bankruptcy or something like that, then there will definitely be bailout packages. And who ends up paying for those bailout packages? That's right, it's Germany again. If France is facing a government default or something like that, then of course there will be bailout packages, and who ends up paying for those bailout packages? That's right, it's Germany again. So what's happening here is really very, very insidious, and we need to keep a close eye on it. That's of course Germany again. This means that what is going on here is really very, very perfidious and needs to be watched very closely. Before we come to the ECB, let's take a quick look at Switzerland. There was almost an emergency interest rate cut here. Here the interest rate would not be cut by 25 basis points like in Europe, but by 50 basis points, and if you have a 50 basis point interest rate cut here, then people usually assume that the economy is doing very, very badly. A lot of people were speculating whether the central bank in Europe would also cut by 50 basis points, but that definitely wasn't the case. A lot of people are now maybe expecting a 50 basis point rate cut in January here in the Eurozone, but Switzerland has jumped the gun and already made that 50 basis point cut. This is really sending a strong signal, and it's going to send Bitcoin to the moon because more money is going to be circulating. It's not just Europe lowering rates. Switzerland is cutting, Japan is cutting, Canada is cutting, the US is cutting, and China is cutting too. China even announced quantitative easing, so there's a lot going on right now. The European Central Bank announces that we cut our key interest rate by 0.25%, which is 25 basis points. Inflation is now getting closer to our 2% inflation target, and that's why they can make this rate cut. They also add that the economy, meaning the economy in the Eurozone, is slowing down, and that's always a sign that when the economy is doing poorly, the market often reacts positively, like the stock market or even Bitcoin, because that means interest rates could potentially be lowered, and that's always a signal for the stock markets to pump up, and for Bitcoin to rise when cheap money is expected. So if you've been paying close attention, you'll see two contradictory statements now. When the economy is doing poorly, the market often reacts positively, like the stock market or even Bitcoin, because that means interest rates could potentially be lowered. And that's always a sign that the stock markets start to pump up, and Bitcoin goes up when cheap money is expected. So, if you've been paying really close attention, you'll notice two contradictory statements now. At the beginning of the video, I said that inflation is rising and interest rates are being lowered. Christine Lagarde says it differently. Inflation is going down. Inflation is under control. And interest rates are being lowered. You can see it here too. Oh, it's the wrong way around now, but whatever, I'll read it to you. Alex Frankenberg is posting something here about a news piece. Bitcoin, the ECB is lowering the key interest rate despite rising rates. This is actually a new report from the Süddeutsche that talks about the insidiousness of the ECB. The deposit rate is now at 3%, and the key interest rate is at 3.15%. What's really insidious is that the interest rate here isn't determined by supply and demand. In the bond markets, at the long end, the interest rate is still somewhat determined by supply and demand. But at the short end, where the ECB has control, the interest rate is not so much managed as it is really manipulated by the ECB. Here, they're really playing with people's purchasing power. The disinflation process in 2021 is going according to the ECB's plan, meaning that inflation is continuing to go down, and not like Marcel Fratzscher or some amateur economists say that prices are getting cheaper. I think Habeck also mentioned that prices are getting cheaper. No, the inflation rate is going down, which just means that prices aren't rising as quickly anymore. So that means prices in the supermarket aren't rising as quickly anymore. But just because we have disinflation with the inflation rate going down, it doesn't mean that prices in the supermarket are getting cheaper. So, shout out to all the amateur economists like Marcel Fratzscher and Robert Habeck and all their crews. You have to take back any clowns or you'll get a house search or something. But I'm also in El Salvador now, so I can take it relatively relaxed. You're welcome to stop by here. There's nothing to find. There isn't even an address. You wouldn't be able to know what address I live at anymore. Because here in El Salvador, I'm really so far out in the outback. There really aren't any street addresses. You can't have anything delivered there either. But now back to Bitcoin. There's no commitment to future interest rate moves. So they said here, okay, they don't want to commit to whether we're going to cut by 50, 75, or 25 basis points in January. The goal remains clear, to bring inflation back down to 2%. Notably, the term restrictive is disappearing from the communication, a sign of possible flexibility. So there are definitely some signs being pointed out here about whether we might even see 50 basis point cuts, and some are already speculating about QE, which is basically illegal state financing, if the European Central Bank starts buying government bonds again and not just manipulating the short end, but also the long end.
We are determined to make sure that inflation stabilizes sustainably at our 2% medium-term target. We're going to take a data-dependent approach and look at things on a meeting-by-meeting basis to figure out the right monetary policy stance. In particular, our interest rate decisions will be based on our assessment of the inflation outlook. In light of the incoming economic and financial data, the dynamics of underlying inflation, and the strength of monetary policy transmission, we are not pre-committing to a particular rate path. The decisions made today are detailed in a press release that's available on our website.
This is an excerpt from the current press conference on the interest rate cut, and the reason I am showing this to you is because we hear the same thing over and over again from Christine Lagarde in every conference. I almost thought this might be an AI. Write to me in the comments, maybe it is an AI and maybe it wasn't Christine Lagarde at all, but jokes aside, the same old story is repeated over and over again about how yes, we are data dependent and blah blah blah, and that doesn't work anyway. I have explained this many times before. You cannot be data dependent because the data is always 2 or 3 months late. So you can't really be data dependent if you're always behind the curve, always chasing the inflation rate. They're saying they want to make sure there are no fixed interest rates that they're aiming for, that 2%, but they don't want to lock themselves in. On the other hand, they're now releasing a statistic. I took a look at it, and Christine Lagarde just said there's no inflation plan, but if I'm seeing this right, it looks like the ECB has actually published an inflation plan. Of course, by inflation plan, she probably means how the interest rate change rates are set here, i.e. whether it is 25 basis points, 50 basis points, and so on. It does not actually give the interest rate change rates here, but the ECB gives an inflation outlook, and here you can see very clearly that by 2024 we will have an inflation rate of 2.5%, and according to the ECB it will now go down to 2.2%, and then in 2026 we will even be at 1.9%, and in 2027 we will go back up to 2.1%. I don't know where Christine Lagarde is getting these numbers from. They seem really arbitrary, to me. This inflation plan she's published looks wilder than the speculations and Bitcoin price predictions from Michael Saylor. So Michael Saylor could definitely learn a thing or two from Christine Lagarde about the predictions she's putting out there. Jan Wassenfeld also points out in the comments that the outlook always shows a 2% target. No matter what really happens, whether inflation shoots up or down, it always states 2%. And they keep uploading the outlook saying, yeah, we'll be back at 2% soon. But if we look at it historically, we've always been either below 2% or above 2%. So the ECB just can't seem to do their job. They have one job and they can't seem to get it done. This means that the ECB is simply not able to do its job here. They only have one job and they are not able to do it here. On the other hand, they post things like this here in Ikes where they say that the climate crisis and the loss of biodiversity here are threatening our economic stability, They say here on the European Central Bank X side, and now they are getting involved in climate change, biodiversity, whatever things. They are getting involved in all sorts of other things, but they are not managing to fulfill their core competence or what they are actually supposed to be doing, their mandate. That means they're now making a case for the climate crisis, they're making a case for saving the world and so on, but they're not even managing to keep monetary policy stable here, that Bitcoin is a massive alternative with 21 million with a completely transparent monetary policy, where you don't have to trust a central banker whether he's doing the central bank policy right or wrong, 2001. And that is ultimately the fatal thing. The central bank is moving further and further away from its core task and is simply no longer able to do that, but is now also interfering in other things. And then I found something interesting that supports my AI theory because I mentioned that they keep repeating the same old tune. They're basically gaslighting you, telling you, yeah, we're aiming for 2%, we've got everything under control, and all that data-dependent blah blah. But in the end, it's about gaslighting you, selling you the idea that 2% inflation is good. It's not good. It's theft. It means half your purchasing power gets inflated away over a lifetime or something like 30 years or so, or maybe even 35 years. And now someone has actually figured out how the statements from central bankers keep repeating themselves. Here we have, for example, in 2011, Trichet, the central banker at the time, said, risks to economic growth remain on the downside. In 2019, Draghi said, risks to economic growth are still weighted to the downside. In 2024, Lagarde says the ECB sees risks to economic growth tilted to the downside. So you keep seeing the same old tune over and over. And the trick they're pulling here is that they want to justify these money packages, like for example, to justify quantitative easing, to justify low interest rates, just to cover up the national debt. As I have already said, E.Chi. France has huge state debt problems, we need new, cheap money, and interest rates have to stay low. The job of a central banker is not to create the best monetary policy. It's to stick to what was decided before, which is to maintain a low-interest policy to keep zombie states and zombie companies alive, to prop up the whole economy, like a drug addict dependent on money. They're now picking arguments or justifications to back up the decisions they've made, which is to bail out the economy, to save the economy, to create bailout packages, and soon there will be quantitative easing too. They're preparing for that by saying, okay, the economy is at risk of going down, which means the economy isn't doing so well. And when the economy isn't doing well, they can announce all sorts of packages and so on. So they're picking out arguments or justifications to back up the decisions they've already made, which is to bail out the economy, to save the economy, and to create bailout packages. Eventually, there will be quantitative easing too, and they're already setting the stage for that by saying, okay, the economy is at risk of going down, which means the economy isn't doing so well. And when the economy isn't doing well, they can announce all sorts of packages and so on. That means that what is being prepared here is already what, for example, quantitative easing resumes, opening money floodgates. It's about prolonging the Ponzi scheme, not stable monetary policy. I don't blame Lagarde, she's merely an elected president. And of course, you need good justifications for that because, as I mentioned before, it's not really about maintaining a stable monetary policy. It's about keeping the Ponzi scheme we're going for as long as possible. And I don't even want to blame Lagarde for this because in the end, she's just a president who was basically appointed to the position. No, she wasn't elected to an office. She came into a position. That's the next topic, I'd say. In Germany, you can still somewhat choose your politicians, but in the EU, in Brussels, in the European Parliament, you can't really have a say anymore. There, they decide for themselves who becomes president. They're about to elect some new president in the EU Parliament again. That's where they decide for themselves who becomes president. They're about to elect some new president in the EU Parliament again. Or was that the president or chairperson, whatever, something was going on there. And Christine Lagarde wasn't elected either. She was basically appointed. And you really have no say in this at all. And it's really not about doing something good for you. It's more about keeping the Ponzi scheme going. And Christine Lagarde basically has the job of a pilot getting into a plane. The plane has already taken off. It's flying. And the only thing Christine Lagarde has to do now is keep the plane up in the air for as long as possible. And she has to make sure that she doesn't crash the plane because a crash would mean the euro crashes. But she can't land it either because the plane is already having, let's say, massive problems. The wheels have failed, everything is broken, and so on. This means that the aim now is to keep the aircraft, which is actually completely dilapidated, in the air for as long as possible. Christine Lagarde did not start it, she simply took it over. In the air, so to speak, in a cold handover, and is now in a difficult position, because she has also taken over a very, very poor basis here. And all she can do now is make people some gaslighting promises. We've got it under control, we've got the plane under control. But they don't have anything under control. And the question now is, will the plane crash during this period? Will it be the next period? And every president tries to push the crash further down the road. The plane will never land. Everyone knows that the plane will either fly into the mountain or crash down or into the sea or into the runway or something. We'll make it impossible to land. And now the question is when the thing will hit the wall. Feel free to drop your takes on that in the comments below. I'd recommend you get into Bitcoin. Also, feel free to check out 21 Bitcoin, the easiest way to buy Bitcoin in Europe. I'll put a link down below for you. Here, you can even get up to 20% off the fees when buying Bitcoin with the code BitcoinHotel. Super easy, simple, and I highly recommend it, especially for beginners. Here, you can really easily accumulate and buy Bitcoin, stack it, even with a savings plan and many other features. And feel free to subscribe to the channel. It's really important that we pick up the pace with the channel now. See you later. Peace out, usant.